Support and resistance is one of the most important concepts in trading, but I see every day that a lot of traders make mistakes, which are not necessary. And in this video, I have compiled the most important tips for you when it comes to using support and resistance, and also things that you have to avoid at all costs. First tip, I would always recommend to start looking for support and resistance on the higher time frame. Here on the left, we have the daily time frame, and I would always recommend, even if you trade the lower time frames, look for your levels there, because the higher time frame levels carry more weight, and also you will not end up with 100 levels, as I will show you in a moment. So start your analysis on the higher time frames, look for where are important turning points, and then draw your levels there. And then here we are on the lower time frame, the 2 hour, and you can very nicely use the higher time frame levels there then. The second tip ties in really nicely, because I often see traders end up with something like that, and then they end up having levels everywhere. They are scared of every little level that the price may bounce, and then what happens is something called paralysis by analysis, that you cannot execute any trade because you have just way too much on your charts and you are just scared that the price may never go anywhere. So focus on the major levels, start your analysis on the higher time frame, and also tip number 3, update your levels regularly. What I do in my trading is that I update my levels every single day. I go through my charts and I look for when is the market paying attention to a level and when is the market breaking and just trading around a level. And once we have a period where the market is trading around a level, I will just take it off and look for other levels and not worry about that anymore, so that I will always have clean and up-to-date charts. Also, what I find very helpful is that you use zones instead of just single lines. Whether you trade stocks, Forex, cryptos, commodities, whatever it is, price is very dynamic, volatility is a real thing, and it's very hard to nail or narrow down price action with just single individual horizontal lines. So what I have found very helpful is to look for zones instead of lines, and that is going to help your analysis much more. Also, what is really important is don't expect 100% precision. The market will sometimes overshoot a level, sometimes we will come short of a level, and it doesn't mean that the level is not working. And those are often signs that a stop run is occurring, liquidity runs are happening, fake outs, stop runs, and those are actually patterns that you can trade in and of itself. I made videos about that. However, it doesn't mean that the level is not working. It just means that you should not trade a level blindly, which I will come back to in a moment. So don't expect 100% precision, and be prepared for the market to violating the level and then coming back. Especially in beginning, what I found really helpful is that you occasionally switch to a line graph. If you are just trying to understand how to find support and resistance levels, switch to a line graph and start marking the important turning points, and then draw your levels on those turning points. And then once you switch back to the candlestick graph, you will see that it often provides you with very nice support and resistance levels. So that's a good way to practice your pattern recognition. Also, what I would always recommend, don't trade the levels blindly. I see a lot of traders putting pending orders at previous support and resistance levels, but I found that this is not really what you should be doing. Instead, once you have identified a support and resistance zone, like here in blue, and the market is approaching it, wait for it to reach in the zone and then drop to a lower time frame like here. And then you can create your trading plans. Just because the market is reaching a support and resistance zone, it doesn't mean that you should automatically enter a trade, because there's a good chance that the market will just break through this zone and never look back. However, you can greatly improve your win rate if you have a lower time frame trading plan. So on the lower time frame, like here, what you could be doing is look for trend lines, look for patterns, define a breakout point, and then you could come up with a trading plan that says, I'm only going to go short if the market falls below the pattern, the trend line, and that is then how I would approach trading this higher time frame support level. Use Confluence Clusters. Support and resistance are very important and they often work quite well, but I would always recommend to use them in combination with other confluence factors. And what I found especially helpful is using objective confluence factors, such as pivot points here or a moving average. Every trader is always going to have the same pivot point and the same moving average. They are 100% objective, whereas support resistance levels are a little bit more subjective. So combining subjective and objective tools can greatly improve your chart reading. It also makes things a little bit less discretionary, and you can often see where those tools intersect, where you have the pivot, the moving average, and a support resistance level. That's often where you can see very nice reactions. And again, last point, don't use support and resistance on its own. So here you can see we have a support level, the market is reaching into it, but obviously there's a good chance that the market will fall below that. However, you can use support and resistance as a concept to complement your other trading strategies. So what you could be doing in this case to say, okay, I want to buy off the support, but I don't want to buy just yet. I want to have more information. So what you could be doing is drop to a lower time frame and look for other confluence factors. And then you build your trading plan. For example, here on the lower time frame, we see we have a trend line, we have a moving average, and here's another flip zone. So previous support turns into resistance. So we could be saying, okay, we have this higher time frame support, we want to buy, and on the lower time frame to get into the trade is we need to get above this cluster. We need to get above the trend line, above the moving average, above this flip zone. And once we get above this, then we're going to go long in accordance with the higher time frame support level. And then you can see this what happens afterwards. We can also add pivot points. You can have a break and retest approach. But again, I would recommend to not use support resistance on its own, but layer other confluence factors and other tools together and on top of a support and resistance approach, and then you may improve your win rate and your profitability quite significantly.